What's up, guys? It's the trucking guy coming at you. Wanted to bring you some quick content. I ran across this article and I see a lot of guys online. Everybody's talking about, the minimum to run, fuels through the roof, yada, yada, yada. So I thought I'd just kind of bring a little bit of insight. You guys can go find this info. I actually looked up this article here. It's coming from Freight Waves, which is a good resource you guys can go check out. But it basically says the number of loads posted on DAT load board network fell almost 11.9% during the week of March 6th through the 12th. Continued a trend of lower volumes through early 2022. The available spot market load has fallen 18% since the first full week of January. DAT reported the number of available dry van loads is almost down 94% during that period and 6% lower on year over year. The weekly average van line haul rate dropped 6 cents to 2.54 cents per mile compared to a previous week. The reefer rate also fell 6 cents week over week, 2.89 cents per mile, while the flatbed rate rose a penny to 2.70 cents a mile, so 2.70 cents a mile. According to DAT, line and haul rates do not include a fuel surcharge right now. And never have, really. I mean, you got to ask for your fuel surcharge additional. There's a few companies like Mercer that'll throw it in there, but, every once in a while, TMC, stuff like that. But for the most part, most of the brokerage houses won't add the fuel surcharge. It's not included in the line haul. That's just a negotiated rate, flat rate for, $2,000, $3,000. The fuel surcharge was 60 cents a mile for van freight last week, an increase of 15 cents compared to the previous week. So when these shippers are going and charging fuel surcharge, or brokers, some of the brokers are, some of them aren't, but dedicated trucks like JB Hunt, some of these bigger ones, they're charging fuel surcharge to the customer, but they're not paying it to you. They're just negotiating rates. So if they get 3,000 plus fuel surcharge or whatever, then, they're basically not passing that on to you and they're keeping it. So, you could try to negotiate during right now to get fuel surcharge. You're going to be successful sometimes and sometimes you're not. But the fuel surcharge is basically just the difference in, so if it was a negotiated contracted rate for $3 a mile and fuel at that time was $3 a gallon and fuel went to $5 a gallon, they're only going to pay, so say $3.50 a gallon in a national average, they're only going to pay that 50 cents as the fuel surcharge difference, okay? And just because the fuel rate went up while the contracted rate stayed the same, okay? So what the fuel surcharge is that difference in rate, all right, that's changing, that they're willing to pay or offset cost because cost went up. So if you build a house and the cost of a 2x4 goes up, you have to allocate that into the cost of the job, and the job has to go up, okay? Or if shingles go up to roof the house, or if stucco or paint goes up, or block goes up, or concrete goes up, you can't do the same contracted rate because costs are now incurred higher. So you have to relay that cost onto the customer. You can't eat it. All right. So that's kind of where a surcharge, comes into place, or what a surcharge is. But they're saying that, most, line haul rates do not include fuel surcharge. Okay. Which was 15 cents higher than the previous week. So the fuel surcharge is even going up. Which was from 60 cents on van freight. Now it's 15 cents higher. So DAT, or data from truckstop.com, which is another load board, their intelligence for the week of March 11th also showed that the dry van refrigerated segments continue to see lower rates despite record high diesel prices, which is crazy that the reefer rate is dropping, rate per mile is dropping while fuel is going up through the roof. The firms noted that even though the rates in both van segments and reefer were higher year over year during the week, both were down, excluding fuel. So truckstop.com is saying that it's seen a 7 cent decrease in van rates to $2.76 a mile during the week, and 6 cent decrease in reefer rates to $3.10 and $3.10 a mile, and a 9 cent increase in flatbed rates. Everybody always asks me, why do I do flatbed and step deck? And the reason is because it continually stays pretty high, and also the truck to load ratio is in our favor, just because there's not as many out there. Not a lot of people want to do it. It is a tough job, tarps, cold, all that kind of shit. But if you're somebody who likes to get out and work out a little bit and get out and strap, keep the blood pumping, keep the blood clots from happening, things like that, then it is the right job for you if you like to work out a little bit. So basically the flatbed rate is increasing, okay, whereas the dry van and reefer rates are decreasing. So that is crazy. That means that household goods basically refrigerated chicken, ice cream, all that kind of shit, they're buying less of, but building supplies and things that the commodities that we haul on flatbeds and step decks are increasing, which is good. I mean, for now, hopefully. The national average van load to truck ratio dipped from 5.9. So this is dry van to load ratio, okay? From 5.9 to 4.7 loads per truck. That means the available loads, there's basically 5 loads for every truck. Right now, it dropped from 6 to 4.7, okay? Meaning there were 4.7 dry van loads for every truck on the DAT network last week. The reefer ratio also slipped from 11 to 8.9. So 11 loads per truck to 8.9 loads per truck, while the flatbed ratio dropped also from 103 loads or 103.5 loads per truck to 88.5 loads per truck. So if you guys want to find this information, again, Freight Waves, DAT, Trendline, all that, you can find it. The flatbed ratio is still significantly higher relative to the same week in recent years, and there are 31% more flatbed loads on the network year after year. Step deck is thrown in there with flatbed as well, guys. They don't really have numbers or statistics, breaking down for those individual categories. But anyway, overall, the number of trucks posted on DAT network rose 9.2% last week compared to the previous week. So that means the amount of trucks posted went up almost 10%, 9.2 since last week to this week. The broker to carrier spot rates posted on the load boards include a surcharge. Spot truckload prices were considerably higher this week due to sharp increase in fuel surcharge amounts. So that means a lot of people are asking for fuel surcharge, which is good. You should be asking for fuel surcharge, okay? Here's something also that I'm going to see if I can show you guys just so you can see it. I don't know if it's going to be kind of digital or not. You can kind of see it there, but this is region. So you got this area at 285, 365, 307, 334, 335 in the Northeast, Midwest, Southern regions, Southeast. 285, you're in this area, which is not good. And this is flatbed only. I could go to van or reefer, but you go to this website, dat.com, industry trends, and it'll basically tell you right here, okay? Also, guys, this is where you want to come and really kind of focus on your numbers and see what the market is trending like. So we've got van from December to March, the increase, it's been steadily going up and down and fluctuating like the market does with the stock market or anything else. The economy just goes up and down. So in December of last year, it was $2.99 a mile. January was $3.10, February $3.09, $3.06. This is dry van. December for flatbed $3.07, January $3.12, $3.17. So this is trending upwards for flatbed, which I like. This is kind of trending all over the place. And then reefer is $3.47 to $3.59 in January, $3.52, $3.46 per mile average. That's what that is, guys. Is your rate per mile and how it trends. So I like flatbed step deck is going up. That's good. And this is sectors of the economy. This is household goods, toilet paper, toothpaste, that kind of stuff that doesn't have to be refrigerated. These are construction commodities mostly. Your lumber, your metals, your construction equipment. And then this stuff is your ice cream, chicken, and consumables, So that kind of tells you how it's trending. This is trending up. This is trending kind of steady, in a slow downward motion. This trended up and then the same. This trended up and then the same. This just has been continually trending up. So what does that tell you guys? What does that really, if we want to look at that data and say, okay, what does that mean for us as truck drivers? What does that mean for us as company owners? It means that basically this is the market. And then what I'm telling people right now, because I have even my owner ops calling me, I have friends, my consulting clients calling me, man, I can't do anything less than $4 a mile. Man, I can't do $5 a mile, these crazy numbers, right? But I actually watched Hauling Cash tonight, and it made me want to make this video. But it made me think he went and actually looked at costs, right? So if you look at the industry, rates per mile, where they are right now from the numbers that they're getting, the statistics and the what they're reporting, this is where you need to go find it, right? This tells you, week and month and year as well, spot loads posted, spot trucks posted, van to load to truck, van spot rates, flatbed load to truck, flatbed spot rates, reefer load to truck, reefer spot rates. So depending on what you haul, you need to know your numbers, guys. You need to know where they're at. You need to know how to access this information so that you can see what you should be charging. Are you trending with the market? Are you getting fair market rate? Are you getting below fair market rate? Because if you're in this green map like I showed a minute ago and you're in the southeast region and it's $3.34 a mile right now as a national average, and you're booking $3 or $2.85, well, guess what? You're getting below fair market rate because the numbers are coming in from DAT saying it's $3.34 a mile. So if you get 334, you did good. If you get above that, you're kicking ass and taking names. But what I'm telling people is the rates are going to go up, but fuel may come down some, maybe not. We'll just kind of have to see. Fuel may go through the roof. We don't know what's going to happen, right? So what we do got to know is we got to just be more strategic about booking loads. We got to just be more strategic about buying our fuel. We got to be more, don't live in California and buy all your fuel there. Don't live in Florida and buy all your fuel here in South Florida and different places. Try to get it in better areas. If you can buy it in kind of the Midwest or Northeast regions, I heard it's been okay. Kind of like Midwest area. But getting out of certain areas, man, it's not good to buy fuel and fill up in those areas. Try to get it just enough to get you out to get to a better area so that you can save that $50, because it matters now. It matters before, but it really matters now. And it's just what you have to do. So, but I just wanted to kind of hop on here and tell you this, but I was also listening to, Danny over Hauling Cash on his YouTube channel. Go check him out, Hauling Cash. But he was talking about how, everybody's saying, oh, I can't run. I've got guys telling me $3.50 a mile is the bottom, right? I've got guys telling me, $4 a mile is the bottom. And it's just not realistic. I mean, yes, we've been getting $3.50, $4 a mile rates consistently for a long time, but that's not the bottom. We'll still haul $2.85 on a hot shot, $2.65. You know what I mean? And if you were hauling stuff he basically went in and showed it that, it's went up basically, $2, which is like 33%, right? So if you take 33% and tack it onto your loads, that's what you should be charging. It's 33% right now. If fuel doesn't go up anymore and it trends where it's at right now, if you were getting, $2 a mile before, you should be getting, if it's 33 cents a mile more basically on $1, then you should be getting $2.35. Or if you're getting above that, you're going to be okay. If you get the fuel surcharge, start asking for it. You'll be okay. If you don't get the fuel surcharge, they say we don't do that, we'd only negotiate line haul or whatever, then okay, go to the line haul and say I need another, if you're doing a 500-mile run and it equates to about $165, tell me you want $200 more. Instead of going to them and saying I need a minimum of $4, just say I need $200 more to cover this. And I know it sucks, guys, because you used to go in there and that was your bump anyway. You take a load that was doing whatever, you bump it 200, 300, 500. Well, now you got to get the bump. You can't not get the bump. Where before you didn't get the bump, now you have to get the bump, and they're going to understand it. And, I'm talking to brokers, I'm talking to shippers, I'm talking to friends, and they're saying the customer's not willing to pay it right now. They're not ready, because then they have to relay that cost on the customer, and the economy's not ready. As interest rates go up, they're hoping to help with, offset inflation. This shit ain't going to do nothing. As fuel continues to rise, we might continue to see this trend. So keep an eye on these numbers, guys. Go in here and keep an eye on this number at DAT Treadlines. Keep an eye on the index. Keep an eye on the rates. Keep an eye on what's going on and see what you have to trend. But if you were profitable at $2, if your cost to operate is $1.60 or $1.20 or whatever, $1.50, $1.60, which is kind of average, cost to operate in that area, depending on how you leverage your truck, depreciation curve, what you have for maintenance, what you don't have, how old your truck was, how new your truck was, if you bought it right, if you didn't buy it right. There's a lot of variables that go into that, right? So you need to figure out your cost per mile per operate, but in that ballpark, right? So if you were still able to make, on $2 a mile, $2.20 a mile, make profit on that, which you must be able to, because if these numbers are populated by the trucks that report, okay? A lot of the one truck operations don't report, but your JB Hunts, they do, right? So if the big companies can operate at $3 a mile, $2.85 a mile, and they're saying that, right here, where was it at? If they're saying that in March, we're going to just talk about March, for dry vans, $3.06 average, flatbeds, $3.31 average, and March for reefers, $3.46 average. Right now, that's the numbers that they're getting. That's what they're, so if JB Hunt can run on 306, you sure as hell should be able to run on 306. If, flatbed can run on, if Mercer and Maverick and TMC and Landstar flatbed division can run on 331 a mile, you should be able to run on 331 a mile. If reefer refrigerated freight, the Walmarts of the world or whatever, if they can run on 346 a mile, you should be able to run on 346 a mile. Now, did they get their truck different? Did they get their trailer different? Is their trailers paid for? Is their owner-operator leasing it? Whatever, that's their rates. They have different ways that they leverage their equipment that they leverage their finances in their business. So you just got to get a good fuel card, get a good credit card that you get cash back, get a business credit card like the Capital One scorecard where you get money back, and use that to buy things that you need. You know what I mean? Save money, be more strategic. That's what I keep telling people, be more strategic. You're not going to get out of business. And if you're going to say, well, fuck it, I'll sit at the house, I'm not going to haul this shit, blah, 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 like everybody did during COVID, and they went out of business and they quit and they sold their truck and now they're mopping floors somewhere or doing whatever the hell they're doing where they're maybe not happy, they have a harder job, they're depressed, whatever it is, and they were happy in the truck. Now they're not doing it, you know, or maybe they sold it and went to work for somebody and now they don't have their truck and they couldn't capitalize on the market after COVID. So you got to be able to make money in the bad markets. You got to be able to make money in the good markets. You can't just rely on making money in the good markets alone. Okay? The best markets is to go out there and buy trucks and capitalize when everything falls to shit. And then when it goes back up, you know what I mean? You can make more money. Okay? So, you know, expand and just acquire when the market goes down. It's the same thing in real estate. When real estate ticks and goes to the ground, all the people who are really wealthy buy up more real estate. They just become machines and buy it up, buy it up, buy it up, right? And then when it becomes super, the real estate market goes through the roof, they make a ton of money, whether they sell it off, they rent it, whatever, right? So you have to do the same thing with trucking. You got to buy and acquire, get trucks, get trailers, get contracts. Then when things blow up and expand, guess who has the capacity to really capitalize and make money on that? That's what happened to me, you know, and that's what happened to a lot of people. So I'm going to stick it through. I'm going to convince my guys to run and teach them the real numbers. That, you know, you got to have that fuel surcharge, and it's going to go up 150, 200 bucks to run that load. Okay. It's not going to go up the crazy amount of money. And guys are saying it costs $1,000 to fill up my truck. And Danny actually said this a really good way. The customer is not going to pay full price for a 6-inch sandwich for a foot long. That was the funniest shit ever. And he's like, I can smell crack through the phone. Everybody's, you know, talking about, well, it costs $1,000 to fill up my truck. It does cost $1,000 to fill up your truck. But you should be, if it's $1,000 to fill up your truck, you should be getting a $3,000 load for that. If it costs $1,000 to fill up your truck, but you're only going 500 miles, then you should be getting $1,500. And you still have half a tank of fuel. The customer doesn't have to pay the $1,000 plus $1,500, because why the hell would they pay for fuel that they're not using, right? They only used 500 miles of that fuel, okay? So that's kind of what it breaks down to, is you still have fuel left, charge that other tank to the next customer, all right? You should still be, I mean, yes, we want to focus on these rates per mile. Yes, we want to focus on these trends. Yes, we want to focus on these averages. Yes, we want to focus on fuel costs and purchasing. But we also want to focus on revenues, guys. This is what I tell people all the friggin' time. You can do a $10 a mile run for 100 miles, make $1,000, and that's all you did all week, right? Big friggin' deal. Or you could do 3,000 miles at $3 a mile and make $9,000. Which one would you rather have? You have to have revenue. Revenue is the driving factor. Big revenues, good profit margins. Okay, it's not what you make, it's what you keep. Low overhead and expenses creates the big profit margins. So watch what you spend more so than you ever did before. Okay, watch these trends, watch the rates, negotiate better, throw out that fuel surcharge. Hey, do you guys have fuel surcharge? Can I get fuel surcharge? I need to get the fuel surcharge on this load. Can I do it for, you know, if the load's paying 28, can I get 3,000 plus fuel surcharge? Can I get 3,300? Look at that 15-day average. If you don't have the 15-day average or 30-day average on your load board, you need to upgrade your load board, spend the money to get knowledge. Knowledge is power. Knowledge is going to make you money. Do those things and you'll be successful. All right. This is the Trucking Guy signing out. I hope that it helped you, and we'll catch you on the next one. Best of luck. If you like this video, give me a thumbs up. Click the subscribe button, turn on the notification ding bell, get the little ding so you can catch the next one coming out. We have a ton of content coming out, and it's really going to help people. I hope so, and we'll see you on the next one. Peace.